it's also some of the large cap companies here that are suffering as well, real sort of rotation out of the banks. And I think to your point, it comes down to what's happening specifically in the Australian economy.
Yep.
And I say that to segue into our stock of the day, because we've gone a bit bigger for the Small Cap Friday program for our stock of the day, which is REA. But it is one of those companies which has seen its share price really suffer this year as all of that enthusiasm goes toward that AI trade and US exceptionalism. But REA last night, we found out after the market closed, divested its India business, but has increased its stake in another Indian business, Orium, to 24.9%. So the Orium PropTech shares are valued at around 68 million Aussie dollars, and it takes its holding up from 5%. REA Group expects the deal to generate an overall loss on divestment of approximately $110 million, accounting for goodwill impairment and transaction costs. Now, the sale follows a strategic review of the India operations. Completion is expected by the end of the first quarter of FY27. And I think at the bottom of that graphic that we had up previously, the housing India business, the listed part of that business, was actually proving to be a bit of a weight on REA Group overall. So, Matt, is this a smart move to recycle some of that opportunity?
I think it is. Look, the Indian business has been quite a drag on REA. It's probably taken a lot longer to make work than they thought, and the market had probably lost a bit of patience. So it's a fairly small loss in the context of the group, only a couple of percent, but I think divesting that, taking a stake, is seen as positive in the market, just getting rid of some of the negatives around the story, around the edges. REA is one of those software stocks that's been caught up in the anti-AI trade. What's AI going to do to the business? I do think the network effects around REA and the moats in the business really make them quite immune to that AI threat. Mm-hmm. So I do like it. I think it's been derated quite aggressively on that. It's pretty rare to see REA trade below 30 times PE. Historically, that's been a very good entry point. You do have the added complication of what's happening with house prices, and does that flow through to low listings in FY27 and 28, which is a potential downside. But I think REA can offset a lot of that through price and product mix improvements to get yield up. So we like the story, but how we're actually playing it is through News Corp.
Okay.
News Corp are the majority owners of REA. With News Corp, you're getting the REA stake, and you're actually getting some pretty good businesses in the News Corp stable as well. You're getting Dow Jones, which is growing on the regulatory compliance side, and energy software business. And News Corp actually could be an AI beneficiary in the publishing side, having to do deals with AI where they're going to have to start paying these publishers for some of their content. So all that wrapped up gets you a much cheaper valuation, a better entry point into REA. So REA is a buy standalone, but we actually think it's better through News Corp.
Okay, so there's a bonus buy, as I like to call them, on this program. Yeah, so a few things in there. Here. Let's hope that AI starts to have to pay for some of the content that it's taking from media companies around the world, like ourselves. Also, that leverage on the price levers that REA can pull. As somebody who's listed a property recently, boy, it's not cheap at all. So when you're thinking, Luke, about REA, the SaaS apocalypse, is the damage been done, so it's now all in the price in your view?
Probably, Nadine, but I think if you'd asked me that question 6 months ago, I would have said yes back then as well. And REA is not alone. Like this contagion has really hit all of these marketplace businesses around the world, Europe, America. It doesn't matter where you are. All investors have collectively decided that AI is a threat to the business model of these types of two-sided marketplaces. Look, REA, I think, is also a little bit unique in some ways. We're talking about at the start of the program the challenges the Aussie economy faces, and I think REA is very much tied into that through the housing exposure. But I tend to agree with both of you that as a standalone business, it can certainly sort of face those headwinds. It can use pricing as a lever, which it's always done in the past, and sort of get through any of those tighter periods. It doesn't scream cheap on an absolute basis, but of course you've got to overlay the quality sort of filter to this business. And I think Matt's quite accurate when he says that trading below 30 times earnings has historically been a very good time to pick up REA. So it's a little bit bigger, than where I would normally play, Nadine. If one of my businesses offloaded an Indian segment to save them $36 million, they would probably triple their net profitability. For REA, as Matt pointed out, it's about a 2% increase. So that's why we're not seeing too much of a market reaction. But I agree. From a narrative point of view, from a management focus point of view, I think this is a good signal. I think they've got some headwinds here in Australia that needs to be focused on. Remove the noise of international struggles and things like that makes a lot of sense. So I'll be positive. I'll say a buy on REA, but maybe just given that sentiment, given the outlook, this is one you're not sort of jumping into head first, just maybe picking up a position over time or slowly adding to an existing position.
Right, got it, guys. So we're starting out with a double buy.